Hello there, my name's Miles Pitcher. I'm the owner of Superior Lending. I'm excited today to tell you about one of the coolest mortgage guidelines that allows for our clients to count income out of trusts. I'll explain what this is, why it's a big deal, and why it's really kind of a cheat code. So, very first, I want to explain what a trust is. A trust is it's a super savvy way of being able to pass assets from one person to another. Usually it's like from generation to generation. And we have revocable trusts, we have irrevocable trusts, we have land trusts. And real quick, a inter vivos means while you're alive, or a living trust, and that's revocable. It's that way because the grantor can change the terms of the trust as long as they are competent. An irrevocable trust means that you cannot change any part of the trust without a court order or all the beneficiaries signing off and agreeing to it. Land trusts are used to generally protect property and make it so that the owners of the property are anonymous. It's used quite a bit in estate planning. But for today's purpose and what I'm showing you on how a trust can benefit a borrower in obtaining a mortgage, qualifying for a mortgage, it only works with our revocable trusts. Okay. So, what does this problem solve? So, think about it this way. Maybe you're a client that is self employed and you're making great money, but because you're just getting into your new business, you can't get a conventional loan and a FHA loan because you don't have a 2-year history of your self employed business. So maybe there's a way to have a trust set up for you that will then give you monthly distributions and allow you to count that income to qualify. Another one we see is a parent who wants to help their kids. Maybe their kids are married and wants to help them to get into a home, but the kids are having troubles qualifying for the mortgage because they don't have enough income or their debt ratios are too high. Most common in that situation is that a parent will co-sign on the loan. And this provides a different way for a parent to be able to aid their children in buying a home without co-signing on the loan. And we'll show you an example at the end. By the way, if you find this information helpful at all, please hit that subscribe button for me. Thank you so much. All right, quick guideline overview. So this trust that gets set up, okay, we're going to call our borrower John. John is the beneficiary of this revocable living trust. Let's say his parents put the money in the trust for him. The trust and the distributions have to continue for at least 3 years, okay, 36 plus months. And I'll give you additional details on that in a minute. For our purposes, having a fixed monthly distribution is the best way to go. If those monthly distributions out of that trust to John vary month to month, then all the rules change on it and makes it much more difficult. But if it is a fixed amount, regularly and consistently paid, we get to count that as income. That's right, we get to count it immediately. Okay. Here's a list of the documentation that has to be in place: trust agreement or trustee statement, and we're confirming the amount, frequency, and duration of the payment. We have a wonderful attorney that we take our clients to, and in a very affordable and quick way, this attorney draws up the trust documents for them, helps to get everything set up to create this revocable trust. Now, can you do trust income so that you can do a conventional loan? The answer is yes. Again, how many months of payments does that trust have to be giving John before they can close on this? There's really no history of receipt, meaning the trust has to be set up, and right when we close the mortgage, that's when the payments or distributions out of the trust can begin. How long does it need to continue? 3+ years. And conventional says from the application date. One key note here is that the person putting the money into the trust cannot be the borrower. It has to be coming from like a family member that puts it into that trust. That's a new guideline change that has just recently happened. FHA, very similar in guidelines, except they give the payments have to continue from 3+ years from when the mortgage term is. Okay. USDA, you totally can do trust income also, except that USDA wants to see 6 months of distributions before you can close on the loan. That's a big difference. Very similar to FHA and the other guidelines. And then VA, very much the same as FHA, again, not specifying how many months of payments or distributions have to be done before closing, and it has to continue 3+ years. Okay. Let me walk you through an example here, and hopefully this will help clarify and solidify how cool this is. So we got our parents here, and they want to help out their child, who, let's just assume this is John again, and he's self-employed. They have some funds that they can use. We put them in contact with an attorney. That attorney quickly works with them, and for a very low fee, will create this revocable trust. Okay. The parents, along with the trust documents, are put in to create this revocable trust. In our case, we're going to say the parents put in $200,000. They wrote the distribution agreement for 40 months. Okay, just to go well beyond and be safe on maybe it's taking John a little while to find the home he wants. So there's 40 months, and the distribution agreement says they will pay out of the trust to John $5,000 a month. And there's a bank account set up in that revocable trust name that holds the $200,000. Okay. Then the monthly distributions start, and they're monthly, and they're regular, they're fixed. Okay. And they go into the beneficiaries or John's bank account. So it's a totally separate bank account that's John's only. Now, the amazing thing is as a mortgage loan officer, I get to count that $5,000 a month as income for John in qualifying for the house. He now is able to qualify and purchase the home that he wants. Okay. This is amazing. This is really cool in how it helps. These parents now have been able to help John qualify for his house without having to co-sign on the loan. Okay. We are licensed in all 50 states. If you have any questions on the trusts, how to get them done, or you want us to help you on getting this set up with a mortgage and getting the trust, we can get you connected with the right people. Thanks for watching the video.